Hey guys, this is Karthik Kantwal from Apex FinServe and I'm back with your expiry analysis for the weekly video as is the routine these days. Without wasting much time since it's already pretty late, quickly moving on to the what's new for tomorrow, starting first with the equity side as usual. So we have a long position on SBIN because it was making lower highs on the hourly, which is a clear fundamentally bearish structure. We do seem to have a role reversal happening, so we're going to go for a simple swing reversal based entry at 425. If you remember last week, we did take a short entry near 420 and 425 multiple times. This week it's the exact opposite angle. We're going to go for a long trade there. Stop loss at 420, idle targets 1% on the upside. Moving on to the second position is on Mindtree. Now Mindtree, after making big violent up moves over the last couple of days, has now entered in a really flat and really restrictive trading range from 3580 on the downside till about 3680 or 3675 on the top side. So we are going to go for a short entry near that point at 3650, stop loss at 3690, idle targets 1% in the minimum on the downside. The third is a position on Sun TV, where pretty much we had a lower high, but we are now witnessing a range contraction happening. It might even end up becoming a bearish pennant if it breaks on the downside, but it's yet to be seen. We're going to go for a slightly aggressive entry here for a long at 480 near the closest available swing as well as a demand zone. Stop loss at 475, idle targets 1% on the top side. The fourth trade is on M&M, where we're going to go for a short entry because there's a clear lack of structure, and similar to Mindtree, it does have it does appear to be in a trading range from about 800 on the top side till about 760 on the underside. We're going to go for a short at the nearest available demand zone and at a role reversal level as well at 785, stop loss at 795, idle targets 1% on the downside. Moving on to the final equity trade is on ACC. Now ACC is fairly close to its all-time highs, and despite the sideways movement, it doesn't really seem to be slowing down anytime soon. So we're going to go for an aggressive long entry at a role reversal level, which also happens to be a big round number at 2400, stop loss at 2370, idle targets 1% on the upside. Now moving on to the index side of things, which again fascinates you guys the most as it is the expiry. Talking first about Nifty. Now what I have here is clear lack of historical interaction because pretty much all-time highs. So that is a trouble from the chart side of things. But still, if I play around with my rule set, if I just change my expectations a bit, I do have a critical zone at around 17050, about 17040 till 17060. Break of that should lead to a quick retest of 17,000, which again happens to be pretty much the biggest support level that we have as of now. Now on the charts, there's not really very confidence inspiring zones that I have, but even if I go just by simple phase analysis, we did have a very big up move. It's almost from 16600 to 17200. It's a big up move without any pullbacks whatsoever, so we did need a corrective session anyway. As of now, I would say that 17050 is the deciding level. Break of that on the downside should lead to retest of 16950 to 17,000. Break of that on the top side, or at least sustaining of that level, should lead us back to 17130 followed by 17150. From the option chain side of things, I have immediate resistance at 17200, which is pretty far away, with a hefty 3.9 million added contracts. Significant at 17300, the farthest strike that we have, but sadly we don't have any chart interaction there, so no confluence, but still hefty 2.5 million added contracts. Support comes in at 17100 with negative change, but total standing of 2.5 million, which is pretty hefty. That's why, as I said, if it is sustained, we might quickly whiplash back to 17150 just to meet the strike price. Significant at 17,000 with 305,000 added contracts. It's a big round number. I know the addition is pretty insignificant compared to 3.9 million and 2.5 million on the upside. The option writers do seem to be of a solid standpoint that the pullback is really going to have its way tomorrow. The PCR also comes out to be at slightly heavily skewed bearish at 0.94. It's not aggressively bearish, slightly a bit more than moderately bearish, I would say. Just keep it in mind, it doesn't necessarily have to influence your decision making. Tomorrow I would say go short only under 17,000 for safe traders and go long only above 17,150. Anything inside of that doesn't really mandate being traded. Moving on to the second chart for Banknifty, the charts are a little bit clearer. We have a range based expectation from 36,400 to 36,600. Break of that on the top side will lead us to 36,800, and break of that on the downside will lead us to 36,200, where we have other zones waiting. So this is a lot better of a trading opportunity than Nifty, what we saw. Even the option chain does pretty much correlate to our statements. I have immediate resistance at 36,800 with 550,000 added contracts. Significant at 37,000 with 370,000 added contracts. Significant support from the option chain comes out to be at 36,700, which is going to be a decisive level. As on Nifty, we might just whiplash back to 36,700 just to meet that strike price with 519,000 added contracts. Significant at 36,500 happens to be a big hefty number as well, with about 1 million added contracts. The PCR, however, isn't really as much bearish as it was on Nifty. That was 0.94, this is 0.89, so it's probably moderately bearish. It's not going to influence my decision in any manner, but I would say go long about 36,600 and go shorts under 36,400. Anything in between that doesn't really mandate being traded. Now that's it. I do expect more of a sideways to slightly bearish or slightly bullish expiry tomorrow. I don't really foresee any strong one-sided move coming up. But then again, depending on the opening and depending on where it's sustaining in the first hour, my decision might change. Now, this marks the end of today's analysis video. One more thing regarding the September batch of the mentorship program. The people who actually missed out on the August batch, they more or less filled out the September batch as well. So sadly, I do not have any new registrations open. Those who did message me, and I did ask them to remind me in the last week of August, your names are counted for the September batch, and before the weekend I will reach out to you through the back support group, and we'll start sometime in the coming week. That's it for tonight, guys. I hope you have a wonderful and green but still exciting trading session tomorrow. Thank you so much for watching. As usual, if you like the video, if you like the analysis, even if you like the mentorship program, please leave a like on this video. A wonderful comment surely helps. Subscribe to the channel and press that bell notification icon as well. Have a good night. Thank you so much for watching. Bye.